All right. Are you guys ready to get rich, rich, rich beyond your wildest dreams? Just kidding. Just beyond my wildest dreams. How are you guys doing today? Haven't seen you in a while. Last Thursday was the last time we had class, and so we are in the summer schedule where we only have class 3 times a week instead of every single day. But that's okay. We don't uh, we don't mind that, right? In the summertime, taking it a little easy, sell in May and go away. We haven't really done that, and the markets have been good to us. So, good thing we didn't sell in May and go away. We're still trading a little bit here, and today we're going to find some new things to trade. We've sold out a few of our positions, taken some profits, and we are ready to add some more. And one strategy I want to talk to you about today that I want to try and put on a few is a bull call spread with a naked leg. All right, bull call spread with a naked leg. We're going to put a few of those on, and the reason is because that is a strategy, one that's kind of the shorthand of what Yield Max does, and we kind of like the Yield Max markets, and so we've been trading those. And so I figured we would put a few of those on just for fun and let you see how they work. All right, so bull call spread with a naked leg on some of our new markets that we're going to discover. Now, there are 15,000 stocks out there that you could go trade. And I have learned in my experience that it is better to have just a small stable of stocks, all right, that you work from, and not try and scan and search for 10 million things that you're going to trade. You get your little core section of stocks that you're going to trade, and then you just kind of stay in that little world. And it really significantly simplifies things rather than trying to have all these scanners and tools that go out and try and find something to trade. I mean, you can get so many trading opportunities just with a small stable of stocks. And I think it's a better way to trade. You become more familiar with that stock. You become familiar with what the companies do. You kind of know who they are. I mean, we're here to make money. I mean, in the end, right? It's not a video game. We're not here for fun. I mean, we like to have fun, right? It's fun to trade. We like to trade and it's fun. But in the end, we have to realize we're not here for fun. We're here to do business. And this is our business. And this is what we do for business. Now, we can like our business. I mean, if you own a coffee shop, right? You like to drink coffee, you're going to enjoy your business, right? So we're going to enjoy our business. We like it. It's fun. You have to enjoy and love trading for something other than just the fact that it makes money. But you have to really, when it comes down to it, we're just here for work. All right. This is just work, and we're here to make money. So the best way to do that is not to get all scatterbrained looking at 10,000 stocks. All right. It might be fun. Oh, yeah, let's have some fun. Let's go out and see what all these other stocks are doing. And I got this great stock tip over here, or that great stock tip over there. It's a surefire way of giving up your money to someone else when you start trading like that. The best way is to focus in on a small stable of stocks and do your count, measure, setup, trigger, and follow through. Get familiar with the companies, get familiar with what they're doing. That's it. I mean, it doesn't have to be rocket science, right? It's not hard. It's just, it's not easy either. That's the problem. And so to make it easier, it's easier just to have a smaller set of stocks. Now, one of the things that I have done, which is started trading these Yield Max funds. And so I'm focusing in one of my little stables of stocks is the Yield Max funds and their cohorts. Is that what you want to call them? They're pair, right? So we're doing pairs trading. So for example, we'll pairs trade Tesla, TSLA. Everybody loves Tesla, right? We used to. Everybody used to love Tesla. All right. So we had Tesla. So you would pairs trade that with TSLY, Tesla. Those are the pairs. So we trade between the two. All right. If we think we can make more money in Tesla today or this month, we could put some money into Tesla. If we think we're going to make more money in Tesla, we'll put money in Tesla. But those are the pairs. And we can move the money back and forth between those pairs depending on what we're expecting. All right. Now we have to also keep in mind that Tesla, our pairs, the Tesla TSLY version of Tesla pays out a dividend on a specific day. So if that's the case, we can do a little dividend hunting. Not always the best idea, because when you do dividend hunting, you put your money in just before the dividend's paid, and then the market falls and flushes the amount of money that they pay the dividend, right? So that's typical, that's normal, that's what happens, is when they take the money out of the market flushes the amount of money they pay you. So you don't really make any money by doing that, doing dividend hunting. Now, another strategy that you could do is you could wait for the market to pay the dividend, right? The market flushes, and then you put your money in at that point in anticipation of the rise. So there's that kind of little game you can play. But mostly what we're trying to do is we're just trying to play the pairs. And the pairs that we've been trading primarily, and I'm going to show you, I don't want to say we, I want to say me. All right. Me. I got two spreadsheets, and one spreadsheet is our real money account, and one spreadsheet is our play account, right? Our education account. All right, let's pull up first. This one here is my real money account. Okay, so this is real money. This is what I'm doing. And I'm going to outline this for you and show you a little bit of what markets I'm trading. So you can see them listed right here. These are the ones that I'm trading with real money. I have YMAG and YMAX. I don't have a lot. Let's see, where are they down here? YMAG and YMAX. So in YMAG, I have total infusion $56,000. All right. And then in YMAX, I only have $22,000. So those are my smallest ones, I think. Yeah, pretty much my smallest ones. And they're just, the reason they're in there is they're a little bit, I consider them my stabilizers. All right, stabilizers. They're not real aggressive funds. They're the ones that are not an individual ETF stock. All right, they are baskets of stocks. So they have like a true ETF might be. Like YMAG is the Mag 7, Magnificent 7. So there's 7 stocks in there. YMAX is it's a stock. It's an ETF, an exchange traded fund full of yield max funds. So it's kind of a diversification of yield max funds. And you can see that I'm estimating that I make about $2,300 a month on my YMAG and about $962 a month on my YMAX. And then you can see the actuals right here. So this is the estimate, and then these are the actuals that came in. So in January, 2,377, and I got actually was 2,000. So I estimated 23, got 2,000. Estimated 23, got 1,600. Estimated 23, got 1,300. 1,100, 28, 11. So I've actually been estimating way higher than I've actually been getting on my YMAG. YMAG has not been as aggressive as I've been estimating. My YMAX estimated 962, got 700, got 800, got 700, got 700, got 1,000. So that one went over, and then got 400 so far this month. Now this gets paid out. The reason there's this little line in here, see this little line, the little divider line, that's just showing me that these pay out every week. So I have to take this number and multiply it by 4 or 5, sometimes 5. So that's how I get that number. It has to come up every week. So you can see it up in here. Well, this is one number. It's down here where it's multiplied. So like right here, you see that it comes in, and right there it's multiplied. Right now we're on June, so I've only received 2 payments, one of 620 and one of 507. All right. Now you can get this spreadsheet. You can get your version of this spreadsheet down in when you subscribe to Pitt News Magazine. So if you subscribe to Pitt News Magazine, the spreadsheet comes along with that service. All right. Now down here, I have, these are ETFs that are individual stocks. So this is Misty. I have Snowy, and you can see in Misty, Misty right here is right here. This one here is Misty. And that's this little box right here. All right. This is Misty. So you can see my total infusion. I got $175,000. Way too much money in Misty. But nonetheless, I have $172,000 in Misty. And these are all the dividends that it's paid out to me since I got in. And I've, of course, been reinvesting dividends. So I take the initial, and then I get dividends, and I put them back in. So I am $2,900 above parity. Now, what does that mean? I have 2 parities on here. And I'm calculating parity in two ways. And on your spreadsheet, the one I give you in with Pit News, I don't have parity in here twice, and I think we should. So I'm going to do that right now to show you how to do it. You're going to grab these last three. You're going to grab this and pull it over. And now we have gravy train in months. And I'm going to say this is initial deposit. So we're going to change this one. Actually, let's leave that one and we'll change this one. Initial deposit. All right. And so we're going to change this one from calculating it on total infusion, and we're going to add just our initial. So we're going to change this 2 times instead of D4, which is, I got this set to, I want that to be Oh, that's because it changed. That's why. So this is total infusion. C4 right there. C4. We're going to change this one here on this one. We're going to change it to A4. All right. And that's what I've done on mine. So we're going to change that on yours to A4. And that's going to give you 2 gravy trains. All right. Let's get rid of let's make it pretty. Got to make it pretty. No borders. And the reason I'm doing that is that's your break even, or that's basically what we're saying, that when you have no out of pocket risk anymore. All right. So you have no out of pocket risk. How come that didn't give me a pretty border? Oh, it's up there. Pretty border. There we go. All right. So you have no out of pocket risk on this one, gravy train. And this is total infusion. And this is initial deposit. So I call this McDonald's money, right? So you went out, you worked at McDonald's, or in my case, went out, worked at a gas station, right? So you earn money at the gas station and you put it into the stock market. Now, whether you're an engineer, a doctor, dentist, gas station pump attendant, McDonald's, it doesn't matter, but it's outside money. It's money you didn't earn inside the market. You take that and put that into the market, that becomes your initial investment. All right. Now, the biggest question we need to ask when we trade these yield max funds, and I think it's a question you should ask every time you put money into the carnival. And I call the stock market just one big carnival. All right. You have to realize it's a carnival game that we're playing here, and the odds are always stacked against you. The hoops are a little too small and they're farther away, right? The BB guns sights are bent. So you always have to consider that every time you trade in the stock market, the odds are against your favor. And so the question you should always ask is, how long before I get my money back? Where is my break-even point? All right. So I've set this up. That's what I call my parity. So when you get your money back, now the reason I call it parity and not just break even is because parity it's a number that continually changes. Now, your initial UBI, universal basic income, that number really isn't going to change. You're going to put it in there and that's not going to change. But what's going to change is your initial investment or your total infusion. And your total infusion means that every time you get a dividend, right? So that's basically free money on your McDonald's money. You then take that money and reinvest it back into the market. That gives you 2 different break evens, the McDonald's money and then what we call the blended money, right? Blended money that was blended back into the market. And so it's different money than your initial money. Okay. So if you want to know what your blended money is, how much time until you get all of that money back, I'm calculating that here. All right. And so then that's the number we're calculating down here. So you can see that this one here, which is Misty in our portfolio here, is $4,700 above parity. Okay, so that's parity for this one stock, meaning the blended money. So we started with 50,000, and then we reinvested from our profits, whether it was from Misty or something else. That's why it's blended money. We don't know where it came from. We don't know whether it came from, NVIDIA or Tesla or YMAG or any of these other markets, but we put it back into Misty. So we put 6,300 into Misty. Our 50,000 was our initial investment of McDonald's money. Then we had $6,300 of blended money. And then we had all of these dividends that paid out. Now, your money over here is also going up and down in value, right? As the market rises or falls, those shares go up and down in value. So you have that as well. So that's your current value that's sitting here. And then you take the dividends that are paid out. Now, remember, every time they pay a dividend, that current value can fall. So that falls, and if the market's not strong enough to make it back up, well, it'll sit down, but you get the money from the dividends. So that's that mathematical balancing act that you're dealing with. That's why we like to buy low and sell high, or in this case, we don't like to sell them unless we get into trouble, right? So we don't like to sell these markets. We just like to hang on to them and just let it pay us back, and that's called our gravy train. All right. Once we get into a what I call a cash cow, where the market has given you back everything that you've given it, then you have reached parity, and it becomes a gravy. That's a cash cow, and you're on the gravy train. So this one here, the parity is $4,794, which means we're $4,700 over parity, over break even. Now that's over break even of this one fund. Therefore, it is over break even of the blended money. So that's not only the initial investment, it's also the value of the market that it's currently sitting at, the shares, plus all the dividends. All right. So the market has given you back everything that you put into it, and an additional $4,000. Now this one over here, this is Tesla. Now Tesla, we started this account in January, and Tesla has gone straight down. So it's paid good dividends, but the share price has continued to fall. So we are $13,000 under parity on that one, meaning we got more money in there and it's down 13. Now we're making about $2,600 to $2,300 a month. So it's going to calculate how long it's going to take you to get that back. How many days? Dividend most recent, total yield. We've got a parity on here somewhere. Parity. I thought I had calculated the number of. Oh, there it is. Cash cow. So see, your cash cow, it's not going to get paid back that 13,000 in this case for 30 months. That's what that's telling you. At this rate, you've got 30 months, 12, 24, about, almost 3 years before Tesla is going to pay itself back at this rate, because it's down 13,000 and it's got to make 13,000 up. So that's, I think that calculation, I'm sure it's right. No, it can't be right, because look, this says it's 24 months to become, and this is parity is at 697. I got it looks like to me I've got an error in my cash cow calculation. All right. Looks like I got to work on that a little bit more. So parity means that we've got all our money back. So we're a cash cow at this point. Are we a cash cow? Parity means, okay, it depends on how I'm calculating it. Am I calculating it off of this one or blended money versus where the market's currently trading? This one says the parity is over $4,794. Let me go look at my real money account, because it's easier for me to know. Cash cow. This is, I think this is full. Okay, because it's showing, okay, so we got two parity numbers. That's why I had us do two parity numbers. We got gravy train for the full account based on initial deposit, and then we got gravy train total infusion. So this one says, for mine, I've got a total infusion is 815,000. I'm not going to be with my full account, not individuals, on the gravy train for 2 more months. So in 2 months, at the rate we're going, so end of August, I should have, based on total infusion, unless I keep putting it back in. If I keep putting it back in, it'll keep pushing that total infusion out, because that's total infusion. But for my initial investment, I'm already at gravy train, past it by almost 5 months. So 5 months ago, I hit my break even. So I have no out-of-pocket risk. I'm only risking blended money at this point. I have enough money that if I was saying, okay, cash out, I'm done, wipe out my account, just give me all my money, I would have more money than what I put in. That's what that means. I've doubled my amount. See, because when you look at the formula, it takes it right here and it multiplies it by 2. So it takes 2 times A4. So A4 times 2. So that gives me 100% of my money back. And then you have to add up, you have to subtract out of that number all of the things that we've got. So all of our money. So like our stock, our money we've taken out, our cash withdrawal, our cash on hand. So I've got $24,000 sitting in my cash account waiting to be put back into the market or taken out and spent, whatever I want to do. I've already taken $90,000 out. I've got $24,000 in stocks, in other things that are not yield max funds. That's what that is. And then I've blended 111,000. And my total profit, you can see right here, is 294,712. Since July of last year. All right, that's when that number started, because that's when I started trading yield max funds. My first 3 or 4, 5, 6 months of yield max funds, I was doing all kinds of stupid things. And so, but anyway, that's neither here nor there. I'm learning as we go as well. So this is, I'm up 294,000 since July. I made that much. All right. I'm $43,000 over parity right now. And my UBI, my ROI is 62%. Okay. So my gravy train, I hit gravy train on this number, 476, almost 5 months ago. And then for my total blended money, I won't hit gravy train for another 2 months. And that'll probably get pushed out as I add more in. I make more money, put it back in. That'll push that number out. All right. So that's how it's working. And that's where we're at. And these are the markets that I'm in. And so YMAG, YMAX, Misty, Snowy, Tesla, YBIT, PLTY, and NVDY. Would I recommend that these be the ones you go jump into right now? No, of course not. These just happens to be the ones that I've been in for a long time, and I kept and didn't liquidate and have been doing okay for me. And they're just kind of happened to be the ones that, because I started back in July, I kind of got into these and got into them, kind of got stuck in them. And it's kind of like, I feel like I'm stuck a little bit and I don't want to move them around too much. And I want to add some different ones, but I'm a little hesitant to do it right now because the market's flying so high. All right. So I wouldn't recommend, that's not the best portfolio. It just happens to be the one that I got stuck with. All right. Because of the way I traded it, and wasn't the brightest guy with these yield max funds in the beginning. Cause I didn't know. I mean, we're learning, right? We're all learning, even me. And so these yield max funds were new. They just barely put them on the market. We started to trade them. We started having fun with them. And that's kind of how it's been turned out for me. So let's go look at some other stocks that we can choose other than these. I'm just letting you know, these are the ones that I got kind of stuck into. And I don't believe that this is necessarily the best portfolio. I think we can build something better. I would have to liquidate these and put my money into something else. And I'm not really anxious to do that. So that's why I stick with this kind of not the best portfolio. So what I want to do is I want to go through and I want to look at, I think I'm going to have to look at this one. I think I got an error on how I'm calculating cash cow right here. This doesn't look right. And I don't want to waste your time doing it right now. So we'll do it another time. All right. And again, if you want that portfolio, you can get it at pitnews.com. Oh, pitnews.com. What's pitnews.com? I've never heard of pitnews.com. Of course, I have to start telling you guys what pitnews.com is. Before I do that, though, let's come in here and say hi to a few guys. There's John coming in. It's nice to see you, John. We got a lot more people watching the video than who's saying hello. If you guys want to put up your little marquees and say hello, we'll make you famous. There's John. It's nice to see you, John. Albert, great to see you. Chad, good to see you. Randy, great to see you, Randy. We got Bruce and we got Kirk. It's nice to see you guys. All nice to see you guys here in the class today. And I want to come over here and real quick, I want to show you. Claire's been playing with her software. Look at this funny little thing she sent over. She sent this over yesterday for me.
Hey, Land Turner here. I got a hot stock market tip for you. Subscribe to Pitt News Magazine. You can thank me later.
Did you see that little guy?
Hey, Land Turner here. I got a hot stock market tip for you. Subscribe to Pitt News Magazine. You can thank me later.
She sent one of herself.
You know how some people read Pitt News Magazine for the charts and strategies? Me? I started reading it for the pictures. And now I write for them. Go figure. If you want trading content that's smart, useful, and doesn't put you to sleep. Oh, and occasionally features me making up terms like tail fuzzies. Head over to pitnews.com and subscribe. And hey, if you find my picture in there, don't judge. They caught me mid-espresso. Hey, it's Claire. If you love trading tips with a side of sarcasm, hit that follow button and subscribe to Pitt News on Air at pittnews.com. I'll be here every week, unless I blow up my account again.
All right, guys, that's Claire's been messing around with the AI stuff. So we got cartoons, but this is still my favorite one right here.
Look, folks, I was reading this thing, Pitt News, right? Great stuff. I mean, back in Scranton, we had newspapers, but I didn't have, you know, the thing with the facts. Claire Christensen, she gets it. Sharp gal. Reminds me of my Aunt Margie. Could parallel park a Buick with one hand. Subscribe.
All right, guys. This is how you get that spreadsheet. Go subscribe to Pitt News Magazine and get the spreadsheet along with it. Spreadsheet, I gave it maybe a little early, but I've been promising it for so long, but I'm still working on it. It's still got little bugs in it. You guys can work them out yourself because I'm sure great spreadsheet aficionados, that's how you get the spreadsheet. All right. So that was a long way of saying, let's go look at the YieldMax funds first to see if we can find some better positions to be in than the ones that I've got in my portfolio. Because I showed you my portfolio, but I'm not happy with it. All right. I wish I had some other things, but I'm struggling to pull out of there and get into something else. All right. Because I kind of, once you buy those YieldMax funds, it's kind of like you tattooed it to your hiney. You kind of have them for a while. So that's the nature of those beasts, right? So we want to kind of work with what we got. And that's just kind of the hand I'm holding right now. It's not the best hand. So what we want to do is we come over and we want to go, if I can find out how to do this, where's that at? There we go. Okay, we're going to come over and I'm just going to go to the YieldMax website because they've YieldMax ETFs. This is the website that we look at for YieldMax. Now remember, we do pairs trading. So, and I got a new stock that I've been trading. I'm going to show you that one, and I'm going to show you why I got into it. All right. So, what I want to do is I just want to go over to the list of stocks, our ETFs, and we're going to go in, and they got all this crazy. Their website sucks. They got too much animation, which just gets in the way. And they try to do all these little tables and they try to be all fancy and it's really just makes it worse. All right. So I'm sorry, I got to losing my voice. Hold on a second. Make sure I turn my microphone back on. Whenever I take a drink of water, that's when I turn my microphone off and then I forget to turn it back on. All right, here we go. So this is the stocks that they have, Tesla. And then they put the pair right here. All right. So that's the pair. So this is Tesla. That's the version that gives you the dividends. Tesla, that's the underlying stock, usually no dividends. All right. So that's the growth. This is the dividends. So they're pairs trading. You can trade between the two. You make a whole bunch of money in Tesla, well, you can take those profits out and put them into Tesla. And a lot of the biggest problem, the reason I'm recommending that we do it that way is because there's an article in Pitt News Magazine that I wrote where we talk about not theta decay, but we talk about NAV decay. NAV decay in the market. A lot of people are very concerned about NAV decay in these in these YieldMax funds. NAV decay just means you're taking profits. All right. That's all it means. The stock is going to either rise or fall with the movement of the underlying stock. Plus, what we're doing in the YieldMax markets is we're trading options. So we have an options income that comes in addition to the movement of the market. So you have both. You have two sources of income when you're in the YieldMax funds. You have the growth of the stock, which is impaired because we're using options, right? We're using a covered call. So it can only grow so much before they cap out. So if you got to have an explosive move in the market, you would want to be in the underlying. You'd want to be in the TSLA pair, not in the TSLY. But we don't jump in and out. We don't go back and forth like that. What I like to do is I like to take my money from McDonald's and decide if I want to put it into TSLA. If I think we're going to get some growth. Now, you're going to get NAV decay in TSLA too if you take profits. Anytime you take profits, you're going to get NAV decay. So, or share decay in this case, because what you're going to do is you're going to say, well, I put my money, I bought 100 shares of Tesla. Tesla went up 10%. Now I want to go make some house payments, or I want to go make a payment on my Tesla car, right? Well, where are you going to get the money from? Well, you got to pull it out of Tesla. How do you do that? Well, you sell some shares. If you sell shares, well, you no longer have the shares. And then next month, you're not going to have as much growth. And then you're going to take some shares out. And then the next month, you're not going to have, and it keeps getting smaller and smaller and smaller, right? That's called NAV decay as well. And people they're like, oh, no, don't trade the NAV. Don't trade the yield max markets. They have NAV decay. Why do they have NAV decay? Because they systematically take profits every month. And I always teach people, when you trade, it's better to take profits along the way. As you make money, take profits along the way. And the reason you do that is because you get these big paper gains, and then suddenly the market flushes and all of your gains are gone. All right. So if you take profits along the way and then the market flushes, well, it's okay because you took profits along the way. So people won't do that, though. They refuse. I'm not taking profits along this market. I'm going to stay in it forever. So they never take profits along the way. So they never do spend their money. So they become paper rich, and they're pauper poor, right? They run around in a little tiny house in a rotten car, but they got millions of dollars in the stock market because they never take profits. Why? Because they're afraid of NAV decay. So they're trying to grow their profits for a long time. And then, eventually the whole idea is that you can eventually take some of that money off, but people just don't like to take profits. I talk to people all the time who are like, well, I got all this money in the stock market. What are you going to do with it? Well, I'm not taking it out yet. I don't need it. What do you mean you don't need it? Well, I got a big enough pension. I got plenty of Social Security. I got money coming in. I live off of what I've got. I don't need all that money I got in the stock market. Well, what are you going to do? Die and give it to your kids? What do you think they're going to do? They're going to sell it all and go spend it. That's okay if that's your plan, but why don't you spend some of it? Why don't you need it? I don't need it. Well, that's why you go on vacations. That's why you buy things that you don't need. That's what money's for. It's having a better lifestyle, but people won't buy it. So taking profits along the way is the point I'm trying to make. The reason we do this is to make money and better our lives. But I don't want to NAV decay it. That's the point, right? I don't want to sell my shares because then I won't have any left. I'll be like Bill Gates with only 1% ownership of Microsoft. Well, that's where what we do is we take the money out of Tesla. Tesla goes up. Before it flushes and comes back down, we lose it all. Take your profits, sell them out. Oh, now I have NAV decay. That's okay. Take it and put it into TSLY. All right. You're just moving your money from one to the other. That's your pairs trading. Now it's over here in TSLY. You still have shares, right? You didn't liquidate your shares. You took them out. You just moved them. You didn't take them out. You didn't sell them. You didn't do it, right? Okay. We're cool with that. Now they're over here in TSLY. Now TSLY will force you to take profits every month. That's what they do. Every month now they're going to take profits without selling your shares. So we solved the problem of, oh, no, I don't want to sell my shares, but I want to take some profits. How do you take profits without selling shares? Move it into TSLY. It'll stay in there. It won't sell your shares. And every month it'll give you a dividend, and you're taking profits along the way. All right. And then you can go spend it and have a better life. Right? Or you can reinvest it back into TSLY again, or back into TSLA again. You can do anything you want with it when it pays that dividend. You can go and reinvest it, but don't ever drip it. Don't ever drip it. Just make sure that you're always reinvesting it as if it's new cash. All right. Be smart and wise. Count, measure, set up, trigger, and follow through. Every time you get that's why I've got cash sitting on the sideline. You saw my spreadsheet. I have like $25,000 in cash sitting on the sideline because I haven't found anywhere where I want to put it in yet. Why don't you just put it back in and get another big dividend? Because that would raise my dollar cost average up, and I want to bring my dollar cost average down. So I'm looking for a dip in the market and a buying opportunity. I don't like to buy high and sell higher. It's not my kind of strategy, not the way I like to do it. All right. I like to buy low and sell high. So I'm waiting for a pullback. You've seen me do my Fibonacci retracements and ratios, and I want to buy in at 38.2, 50%, 61.8. And these markets have all been so Trump gravy train or Trump train that they've never pulled back. They just keep going and going and going. So we got to get an opportunity to get into some of these markets. Now, I did put some into Tesla because Tesla was making a pullback because everybody, you know what happened to Tesla. I don't need to reiterate it. So the market did fall, and it did give us an opportunity to put some more money into Tesla. So I did put a bunch of money into Tesla. As the market came back and it gave us that little break, we would go pull it up and look at it. It's breaking the blue lights and it's starting to rally once again. So that was a place for me to put some money in, and it did pull my average cost down. So I like to trade Tesla, put the money into Tesla, trade Tesla, put the money into Tesla. That's what I've been doing lately. I started off not doing that, but now that's kind of a way I've kind of formulated. Again, I'm learning too. These are new. I mean, these Yield Max funds, the oldest ones are only like 2 years old. So I got into them last July. So they were only a year old when I found them. All right. So a lot of them don't have very much history. So I don't like to buy the brand new ones because I've noticed that as soon as they come out, they flush. Every single one of them have done that. And then they kind of find their footing, capture their whatever it is they do, figure out where they're supposed to be, their equilibrium, and then they start to trade again. So what I've done here with this list is I'm going to go down through this list, and this is all of the Yield Max funds. So this is one basket of stocks that we can trade. All right. So this is the first basket. So if you're looking for stocks that you want to trade, this would be a great list of stocks to trade. All right. Why? Because they have the pair, the dividend pair that you can move money into, so that when you want to take profits, you're not really taking profits, right? You're not really selling your shares. You're selling your shares, but you're moving them into the Yield Max fund, which is going to take profits every month along the way systematically for you, so you don't have to feel that pressure of selling your shares and taking profits and feeling like you're doing something wrong by selling your shares. All right. You can just move that money into the pairs, take the dividends every month, reinvest them if you want to, but you don't sell your shares out. All right. So there's AOARK. That's a new one for me. I mean, I guess it's not too new. It's been around a little bit, but I have never traded that one. So Apple, there's Apple. You can trade Nvidia. So this is your basket of stocks that you can choose from, so that you have that pair to trade with. So there's Amazon, Meta, Google, Coin, that's Coinbase, Netflix, Disney, Microsoft, XOM, that's ExxonMobil. My goodness, I didn't know that was in there. Actually, I did. I guess I do remember they put that in there. When did they put that in there? Let's go look at it. Let's pull up XOM, and I'm just going to use the little shitty, where to go? Oh, right here. The little shitty website program, because they do dividends. XOM. Let's see. What's the XOM one? XOMO. So let's go look at XOM. XOM. Okay, so that's ExxonMobil. Now, look at that. Mostly sideways, right? Because they pay a dividend. 99 cents on 113. Let's go XOMO, right? So XOMO. So this is the Yield Max version. And it's been going straight down because they've been taking profits along the way. Now it's starting to go back up a little bit here. If the market if XOM, if it just goes sideways, right? Which is what it's been doing, hasn't had any growth over the last year, just went sideways. And then you put your money into XOMO, which is the Yield Max version, and then they take profits out every month. That's why that one goes down, because these guys, the market hasn't started to tilt and go back up for them to cover those drawdowns. So they take the money out. It's the nature of the beast. You really want to have a market where the underlying stock is rising in price. Obviously, I mean, that's, it sounds dumb, right? Of course, Land, you want the market to go up. True. XOM. So XOMO, you want the pair to be rising in price, and ExxonMobil has not been rising in price. So that's why the Yield Max fund just goes down, because the underlying has not been rising. So it's just taking profits along the way, and as it takes profits, well, its NAV goes down because the market hasn't been going up enough to cover the NAV decay and to give you the profits. But let's go see what it's paying out. 25 cents. 25 cents on, let's do the math. Actually, I got a little calculator. Where's my calculator? Let's go see if I can find it. My calculator is pitnews.com/UBI calculator. I think that's where it is. Dividend calculator. Yeah, there it is right there. So we're going to put in the stock symbol, XOMO, share price. Oh, let's bring this over here so I can see. Oh, that's not going to help me. Share price is 1306. And then the dividend amount is paying out what rate? 25 cents. 0.25. Dividend frequency is monthly. Let's say that we're going to put $100,000 into it. Or we just do 10,000. Let's say 10,000. All right. Dividend payout summary. The period would be that's your monthly right there. $353 yearly. So that's on $10,000. I wish I'd told you a percentage. I'm the one who wrote this. Why didn't I put in their percentage? Okay, lad. Got more to do. Okay, so monthly you're getting $191 without reinvestment. With reinvestments, $353 for after a year, $4,000. With your reinvestments, without your reinvestments, $2,297. I don't know what that means to me. $10,000 after every month. It's going to only give me $191 a month on $10,000. $10,000. That's not very good compared to some of the others of these yield max funds, right? These yield max funds, some of them are really big. They'll give you like 100% return. They'll give you like on $10,000 at the end of the year that you'll have $10,000. This one's only giving you $2,000 at the end without reinvestments. If you reinvest, you get $4,000. Okay. All right. I got the break-even calculator over here. I've also got investment calculator. So we could do that. I wonder if XOM's in this list. Let's go see. How much can you earn versus how much do you need to invest? So let's do how much can you earn? Let's put in 10,000 again. And then we're going to calculate. And then we're going to see if XOM is in here. Do you see it? Do you see it? I don't even see it. So this needs to be, oh, there it is. Moderate. Okay, 26.23%. So monthly, 218. Annual, 2,623. So you can see up here, these are the higher ones. So like Carvana right now is their number one, highest one. Okay, so you're going to put in $10,000. And at the end of the year, you're going to have $14,000. That's pretty crazy. In 1 year, you're going to more than double your money with Carvana. And then you got Tesla, which is paying out at 12. SMCI, which is paying out at 11. See, their yield is over 100%. PLTR, Fiat, that's coin. Now, Fiat, I think that's... No, and then this is coin right here. Coin. Oh, we got two. One is the short position. Hold on, losing my voice again. Make sure I turn my microphone back on. Fiat has one for making money go short. That's the Fiat is short, and then Coney is up. So if you think the market's going to rise, you could put your money into Coney. If you think the market's going to fall, you put your money into Fiat. AI, this is a new one, and it's returning every month $682. And you're like, well, look at these. If they're paying all this money, Land, why would you even come down here and do any of these smaller ones? Why would you even do that? Why don't you just stay? Well, because the markets aren't going up, so your NAV decay goes down faster than then the dividends can keep up with it. So you got to kind of be smart about your positions, because you're still got to be a trader. You still got to be able to read your accumulation distribution. You still got to I mean, for example, what's the one that's, let's see if I can sort these. I think I can sort. Oh, nope, can't sort. What's the one that is real shitty? I wanted to tell you a real shitty one, but it pays a high dividend, but it's shitty market. Morrow, that's it. I think, is that the one? mRNA, that's the one. MRN. Let's go look at MRNY. So we're going to come over here to MRNY. MRNY. See, look at MRNY. That thing's it's just been going straight down. You can't make money at it because and if you keep putting your money in, you say, well, I can keep dripping it in. You're compounding your losses. So that doesn't work. It's paying 12 cents on a $2.40 share. See, and up here, it was $10 share. So you're not going to lose money, but you're not going to make money. You're just compounding your losses so you don't make any money. mRNA, which is the COVID shot people, mRNA, it needs to go up, and that's mRNA, and it doesn't. Nobody wants to buy mRNA stock. It just keeps going down, 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 down. And so if we come down here and look at this, sales in billions. This is back when they were selling Corona shots. Now they went from 19 billion down to 3 billion. That's terrible, right? Downgraded. Oh, look, somebody thinks they're going to make money on them. Back in November, they upgraded them. HSBC Securities. That was a mistake. Price target of $58. And now what are they? 25. So that was, whoever made that upgrade got egg on his face. So shares outstanding, they've even been buying their shares back. And you know how I feel about that. I think when a company starts buying, but they're not buying them back very fast. Look at that. It's not very much. 403 to 386. It's actually not very much. But they have been buying their shares back to try and prop their stock up in a losing. Look at this. They're making $28 a share. Now they're losing $9 a share. They went down as low as $12 a share. Nobody wants to buy their Corona shot. I wonder why. So anyway, that's an example of a bad stock, right? Don't want that one. What would happen if you had all your money in MRNY? Well, the dividends would be coming out pretty high rate, and all they would do is just be basically breaking even all the way down. You're not making any money. Now, if mRNA, if you rode that all the way down and just kept reinvesting, dripping and compounding your losses all the way down, and you build up this great big position, and then suddenly mRNA took off and went to the moon, you'd make a lot of money because you've been dollar cost averaging in all the way down. But you've got to hope that mRNA comes out with a new Corona shot that everybody has to take again, and then you'd be rich beyond your wildest dreams, right? Because that baby take off and go to the moon. It's always, markets go up, then you make money. All right, that's how it works. All right, so there is a great place to come and find your list of stocks to be in your little basket of stocks. You want to find the ones that look good for you, and then you have your pair, so you can pair them up with the YieldMax funds and move money back and forth between those two. You get a dividend. You can decide whether you want to put it into your pair, into one of the other pairs. Those are the ones you're going to want to trade because those are the ones that are going to give you the dividends. So there you go. That's what I said on the little marquee out front that we were going to do. We're going to find a place where you can go to look for which stocks do you want to trade, and these are the ones. So let's go look at CVNY. That's the one. That's their top of the list. That's their best one right now. So CVNY. All right. So there you go. There's CVNY. Now let's go look at CVNA, which is the underlying. That's the pair. CVNA. So this is the actual stock. All right. So you can see that it's been going up. Big Trump train right here. So you can see going up, and then it's flushing down. So now they don't pay any dividends. That's why we're looking here. And then we're going to go CVNY. Well, wasn't it CVNY? I thought it was CVNY. CVNY. Oh, did I spell it wrong? Oh, I did. CVNY. Get your fingers on the right buttons, Lan. All right, so there it is, and it's not been going very long. This is 2025. It just started back in January, February, back in February. So, and then see, it flushed. February it flushed, but of course that was the market flush too. Now this is the big rally. Now they're pulling back. Now we can't do any analysis on this market, but let's at least look at the dividend. $4.56. $4.56 for every share that you own, and shares right now are $39. The market's starting to pull back. Let's go over to Track and Trade where we can actually draw some CVNY. CVNY. All right, here we go. Let's come in here and analyze this market. So the first thing we got going, let's look at, so we're coming at, look, we got green on the CMM. Now we want to do all of our technical analysis on CVNA, not on CVNY, but this is our CVNY. Let's come over here, pull up CVNA, because we want to, if we're going to buy money, if we're going to put money into CVNY, we still do our technical analysis on CVNA. So we can come in here, do a Fibonacci ruler all the way from the very bottom to the top. Where do we think this thing's going to come back to? There's 38.2. Right there would be a good place to put your first little tranche of money in. All right. And we can see it rolling over on the MACD. You can see that the accumulation distribution model, which is the chalk and money flow, this is where it was saying buy, right? Buy all through here. Said buy a little bit more in here and then liquidate out here. Now we don't liquidate. This is only if you're going to be a real trader, right? Not an investor. So you're going to trade into this market. Okay. So you buy all these places here, and then as the market goes up, you sell out. And then when you get up to this point here where it crosses that blue light, you're out. You're completely out of the market, or mostly out. All right. And then when it comes back down here, this is where you start to buy back in. Now you can start to buy back in at 38.2 a little bit, and then we put a little bit more at 50 and a little bit more at 61.8. It may not get all the way down to 61.8. You can see that's coming in right there with the 200 moving period average right there. So it's right at 61.8 right now. So that's where you expect this market. Now it'll probably not do a perfect little straight down. Probably do a little ABC pattern. Might bounce off at 38.2, come up, and then we might get a little head and a little top formation, come back down into this little Fibonacci sweet spot, right down into here. And then that's where we'd want to start putting some CVNA into our account. And you could also put some CVNY in there too at the same time. This would be where a good place to put it into, but you're not going to put it into CVNY if it doesn't look good to be in CVNA. So you could choose which one you want to put it in. You could put it into CVNA and or CVNY. Which one do you want? Do you want the growth, or do you want the monthly dividends, or take profits along the way? All right. So this one, you're going to take profits along the way too. You're going to take profits along the way as it rises in price, right? So you're going to do the same thing. But this one, if you put it in CVNI and it rises up, well, you didn't lose any of your shares. You still have all of your shares. So when the market comes down, you can start adding back in along the Fibonacci numbers, right? And you're just going to add to your shares, which will help you dollar cost average down. And then when you have a dollar cost average down, you're going to get a larger dividend, right? There you go. So there's your pair, CVNA, CVNY. You just use them together. Move money out of this one into the other one, out of this one into the other one. Out of CVNA, take your profits out of there, move them into CVNY. Take them out of CVNA, move them into CVNY. That's what I've been doing. That's been working really good. Now, I got a new stock that I want to tell you about, a stock tip. Of course, these are all stock tips, right? But that's where we're going to get our primary core. Now, our secondary core, I wanted to mention before I give you my stock tip. The secondary core is the 100% club, right? Now, we've talked about the 100% club a number of times in this class. So the 100% club is and it's easy to get. You can go to barchart.com. They'll do it for you. There's a bunch of scanners that'll do this for you. The best way to do this is, though, to just go to ChatGPT. That's what I did. I went to ChatGPT and I said, give me a list of all the stocks last year that had at least a 100% growth. They grew over 100%. They doubled in value in 1 year in 2024. Now, it had a pretty good list because of the market ran pretty good in 2024. So we have this list, what I call the 100% club, right? So this is your second little group of stocks that you're going to trade, the 100% club. And those are and back to circle around, right? The weave. We're going to weave back to the very beginning of class where we were talking about just having a core set of stocks. I believe that's your core set. Your 100% growth stocks, those are the ones you're going to trade your options on, right? And we're going to go do a couple of bull call spreads with a naked leg just to show you how to do them. And then you're going to have your pairs trading, which is your mostly going to be traded with share. Doesn't mean you can't trade those underlying stocks with options. You certainly can. You do whatever you want to make money in them as the markets rise. Take your profits, though, and put it into your pair. Take your profits, put it into your pair. If you trade this one with options, put a bull call spread on Carvana, that's okay. As soon as it expires and you take your profits, put it over into CVNY. And then that's how you fund your long-term growth, okay? But this is just going to be 100% club is just going to be pure growth. Once you make your money here, then you're going to want to take it over and put it into one of your, whichever one of your funds looks like would pull your dollar cost average down or is in a nice buying spot. Sometimes the market pulls back and you got in way down here, and that's okay. And it draws your dollar cost average up. That's the way the cookie crumbles. As the market rises, you never can get your markets to go back down, right? It's not always going to work that way. Your share price to go back down. So, all right. So this is your 100% club. And you can see my 100% club is AMD, APP. We just run down through them quick. AVGO, AXON, Coin, CRM. And some of these are already in the Yield Max fund. So you get some crossover. You got Carvana, Genova, Hood. Look at that. That GEV is just crazy. That thing is on fire. We got our X1. I told you it eventually crossed that blue light, and it did. Hit the blue light. And now we got our Fibonacci ruler put in there. This is 38.2, so this is our original place we want to start buying, but it may not ever come down there. There's 23.6. Look, it's already starting to try and break. GEV is already starting to try and break. There's our B. That's B1 right there. If it crosses and goes above that. Now, we've had a couple of these markets break the B1 and not rally very hard. Okay. So we got a couple of those things happening where it breaks the B1, but then it starts to go sideways. And I think this is my opinion, educated opinion, long time been doing this. Market's too strong. Nobody wants to sell their shares. So they can't shake out the retail trader to get them to sell their shares, to get it to come down here so they can buy down in here, right? Because that's where these guys want to buy. They want to buy down in here. If the market won't shake out, what they'll do is they'll run it through. They won't allow it to rise either, all right? They won't start buying heavily themselves. So they'll go through a reaccumulation stage. And when you learn about the Wyckoff accumulation distribution model, there's a point where markets will go through reaccumulation. And so what happens is they go through here. This is their accumulation, right? So they buy all down in here. This is upside down. Okay, save and apply to all charts. There we go. Okay, we got that fixed. So they start to buy all down in here. You can see where all the green is. They start to buy. They start to buy. And then when the market starts to rally, they start to sell out all the way up that uptrend, right? But then they can't get the market to fall. Doesn't want to flush. It's on the Trump train, right? Nobody wants to sell their shares of GEV. They just want to hold on to them. Well, they can't get anybody to shake them out. So what they do is they run it through an accumulation stage. Rather than allowing it to rally and go up, they just sit there and it'll bounce around up in here and go sideways like this for a long time. And they're trying to get them to shake it out and trying to get it to come down so they can buy some lower ones. But if they can't, it just sits there and goes sideways. That's the reaccumulation stage. And then eventually, and I call it the 3 times a charm, you'll see charm 1, you'll see charm 2, you'll see charm 3. And usually on charm 3, these quant systems like 3s, all right? Watch for 3s. Everything occurs in 3s. So that goes 3. So it'll go 3 times a charm, charm 1, charm 2, charm 3. And usually on the 3rd charm after a reaccumulation stage. Not always. It's just, it's just kind of something you can look for. Happens often enough that it's worth putting money on. So it goes through a reaccumulation stage after the 3rd time of an attempt of a rally and a pullback. The 3rd time this charm, that's where they usually go into the next drive up. Okay. So your B1 will be like this, and then you'll get another B1 here, and then you get another B1 here. It's just a real pain in the hiney because you keep getting this reaccumulation, and it's just choppy. And we've actually got some stocks that are going through that right now. All right, here's AMD. We got into AMD right down in here. This is your A1 right here, right? This is A1. And this right here, what's that? That's your B1, right? So we just went into the B1. I told you it'll cross those blue lights. It just does it all the time. You just go back in history and look. It always does. I mean, it might go a long ways, but it's going to break the blue lights and cause your next drive. So that's where we're at. That's a B1. Now, this little ugly thing, I almost want to call this B1 back here. That almost right there wants to be B2. But it's so close to the B1. When that happens, I'm like, you guys, I hate it when you do that. So that almost wants to be B2 right there. I don't know. Sometimes I just call this the B1, and then I say, well, because it broke the blue lights, and then that, so I call that B2. You don't know till hindsight. But the B drive will be over when it breaks the blue light. That's where you know, because the A drive is over no matter how many little pennants formations you get in there. This is your X1 right here, and we'll get an X2. So there we go. That's X1. So there's B1. At least we're in the B drive. We know we're in the B drive, whether that's B1 there, whether we got B1 back here. Usually I put B1 prior to in the valley below the blue light break. So that's because you have your spider web, right? Your spider web comes in with the natural trend line, and then you have the mathematical trend line, and then you have the horizontal trend line. And so that thing came in there just like that. So that's our spider web between the two. And break right there. So this is B1. And then we got this little thing here. I don't know. You could call it B1. Anyway, it's a first green candle to make a new high after the red pullback. There it goes. That's your buy signal right down in there, whether it was a B2 or not. It is what it is. It just is what it is. It's a B2. All right, let's see. We got some questions over here. Bruce, you like my little man? That was pretty funny, wasn't he? Did it look like me? I got my little hat on. I got to get one that says Pit News on it. I don't have a Pit News hat. She put Pit News on my hat. I'm like, oh, we don't have Pit News hats. Randy says he's enjoyed her podcasts. Yeah, she's been doing pretty good. I'm pretty happy with her progress so far. I told her I would like to see her talk more, because she's not talking. She's just doing an introduction, and then she talks a little bit at the end. I said, why don't you add a little bit more of your own thoughts to things? And it doesn't have to be trading wise. So Claire is going to start, because Claire has a lot of ideas. We're going to have Claire give us some of her own thoughts. All right. Not necessarily trading. So it'll be fun to see what she does. I don't know. So you have to wait and see. I told her to talk more. All right, Kim, good morning. Hope everybody's having a good day. I'm glad you made it, Kim. And we got Frosty, good morning, Land, and all. Portfolio coming along, Land. Portfolio's coming along great. We opened it up a little bit earlier. And so at the first of the class, which was an hour ago, Frosty, I opened up my personal portfolio and showed it. So you can, after class is over, you can go back and rewind and watch where I pulled up my personal portfolio. All right, I think we're getting into the point where I want to go and wrap things up, but I want to come in and show you the stock I've been trading. Now, is this mine or is this yours? You to you. That's the class. Let's go ahead and save that. And I'm going to pull up mine again because I have to find, there you go, Frosty. There's my portfolio right there. This is the number you want to see right there. I'm up $291,000 since July last year. So almost 1 year. I made $291,000 in this account. That's even after going through that big nasty thing that we had to sit through after the big flush down. So I'm pretty happy with that. I'm not complaining about that at all. A $291,000 profit, and I'm only 2 months away from having full reinvested total infusion being a gravy train. I've been on the gravy train with initial deposit for almost 5 months. So I'm pretty happy with those totals. I'm up $291,000 in the last year on this one portfolio. So that's good. Let's see. The one I wanted to share with you was Oakley, AKLO. All right. AKLO. AKLO. What is AKLO and why am I in this one? Uh-oh. Why is that the wrong one? I thought that was the one it was in. Oh, it's OKLO. What did I say? OKLO. OKLO. All right. This is OKLO. And I bought it right. I don't think I got in like right here. I think I got in like right there. I didn't get down in here because I didn't get brought to my attention until about right here. And I don't know. I have to go look. Might have even been right in here. I might have got in right in there. Anyway, I'm up quite good on it. I'm up quite well. Quite good, quite well. I'm up good on it. What is this stock? How many of you kind of watch whenever Trump signs a executive order? Do you like to watch those and see where he signs the executive orders and see what they do? I like to watch that because a lot of those will change people's lives, right? I mean, executive orders, that's what they are. They're life-changing events for many people. And some of them are affecting big corporations or small corporations. And that's what happened here. OKLO. Well, let's have fun with it. Let's make it a little bit of a story here. So we're going to go into, how do we get into OpenAI? Here we go. ChatGPT.com. And we're going to go into, there we go. Okay, new chat. Oh, we got a new chat. And what we're going to do is we're going to say, what can you tell me about, and it's OKLO, stock symbol. I don't want to know about the stock symbol. What can you tell me about the company behind stock symbol OKLO? Thinking. All right, there it is. OKLO. OKLO is a publicly traded advanced nuclear technology company based in Santa Clara, California, founded in 2013 by MIT alumni Jacob DeWitt and Caroline Coher. The company specializes in designing and deploying compact, fast neutron reactors, nuclear reactors. Their flagship product is Aurora Microreactor. These reactors generate 15 to 75 megawatts of power. Now remember, a town like Logan, Utah, right? A little town, or a town like St. George, Utah uses about 1 megawatt a day. All right, needs about 1 megawatt. These little micro reactors. Now think about little micro reactors. How long have we had micro reactors? We've had them for a long time, right? I mean, nuclear submarines have little micro reactors in them, and they don't have to recharge their engines for 30 years, right? That's also how we ride around all of our big nuclear aircraft carriers. So the military's had these little micro reactors for forever, right? Everybody's scared of nuclear energy, but we've had these little micro reactors for a long time. They're very safe. We've never had one of our nuclear subs have a problem with their little micro reactor. We've never had one of our nuclear aircraft carriers have a problem with these little micro reactors that are on them. They've been around for a long time. The technology is not like, oh, it's brand new technology. No, it's not. Now, it's been secret technology, and it's been hidden behind the government, and the government's not allowed it out, and it's been under all kinds of regulations, and nobody wants nuclear, but right? Trump signed an executive order allowing the nuclear energy industry to not be so regulated anymore, and they can now put these little micro reactors in all of your towns. So the little micro reactors that have been on nuclear submarines and that have been on nuclear ships, right, and aircraft carriers, those little micro reactors can now be put in cities. So we can now have our own little micro reactor running Logan, or our own little micro reactor running St. George. That's pretty cool, right? And so that's what this is. So Trump signed this thing saying, let's do it. Let's have little micro reactors around the country rather than the great big ones. Not that we can't have the great big ones. He says we can have the great big ones too if the industry wants to build great big ones. But the whole point of it was to make these little ones, these little micro reactors. And this company started back in 2013, and they were there at the White House. The president of the company, this guy right here, Jacob DeWitt, was there at the White House when they signed that, when Trump signed that executive order. And I was like, that company right there, there's the president. They let him speak for like 30 seconds. And he says, hi, I'm Jacob DeWitt. I started a little company 2013 called, and we make this little flagship product. It's a little micro reactor. And I was like, that company's got to go to the moon. So that's just one of those fundamental things. It wasn't a technical reason. It wasn't any mathematical modeling. It wasn't any, it was just straight up, hey, Trump just signed an executive order and that company's going to make a lot of money. They're there in the White House with him when they signed it, along with a bunch of other companies. But he was doing this little micro one. So I was like, I want to find out about that guy. And so I went out there and did some research, and here's his company, and it was publicly traded. And that's what it is. So it's OK is the symbol, OKLO. And I can't remember where I bought into it, whether it was right here. I felt like it was already really high. It was probably like right in here. I don't know. I have to look at the date. But anyway, I bought into it, and I'm making good money. It's up quite significantly since I bought it, and I think it's got a good future. So I think that because of the nuclear, and it's only trading at $50 a share. It's only been around for a few years, so it's not a brand new stock, but he was there in the White House. And I think that they're going to start putting these little micro nuclear energy things around. So that's my little stock tip for the day. OKLO. Now, we probably, do you want to buy in right there? I don't know. I don't think so, obviously. I mean, well, let's do our little counts and measures. This right here is A1 right down in here. Now, I didn't get in on A1. Only the people who knew that Trump was going to sign that executive order did. You don't think that there's any insider trading? Hell yeah, there's insider trading. All those guys that knew that Trump was going to sign that order started to buy right in here. All right. They're back in here because that market took off and went up, and then he signed it. It was either right here or right here. I'm going to say right here. So it went into a B1 right here, and we're in the B1 stage right now. All right. So it's got a little topper is coming down. So the little hairy tops, right? The little hairy top is lower than the previous hairy top. So, but it's still got a lower high or a higher low. I would like to see a little, not here. I would like to see it go a little bit higher first, but I would like to see a little couple of red bars, and then those red bars you could buy in right there. Or you can say, well, I'm going to hang on to this thing for the next 5 years no matter what. You just throw some in, do what you want. But I think you'd be better off if you waited for it to come back a little bit. It may not. It may just go up and then a little back like that, and then up again and a little back like that, and then you wait for it to come down here. It might not come back down here. I don't know if it'll ever come back down here. I don't know. So, but that's the idea, and that's a good little stock. It's been good for me, and I think it's got a great future. So if you want to be a speculator and not nothing, but this is straight up speculation, it could absolutely crush and fall and not turn out to be anything at all, because it is just a little company. But that's who they are. All right, guys, that's a fun one. Put $1 in it. I don't know. How much did I put in it? You want to see how much I put in it? I don't know. Can't remember. I think I put like 20 grand in it or something. I think I just had like $20,000 sitting in my cash account waiting to go in. Yeah, current value. Oh, I put 18,000 in, and it's currently at 23,000. And I went in on 5/24. So let's go see when that was, because that was the day that they signed the paperwork. 5/24. Is it right here? Oh, 24. Oh, I did. I went right back in here, right there. So I did get in. I got in right here. So I felt like it was really high at that point too. I was like, I'm buying high. I want to buy at A1. Can't. It was bought it up here. Went into B1. It's still going. Okay. So that's where I got in. Back in here. Not there. Here. All right. I don't have anything else to give you guys. Nothing else to say. Nothing else to add. You guys have any questions? Any concerns? AOKLO. OKLO Inc. Yep. All right. One more thing, just because it's fun.
Look, if you haven't subscribed to Pitt News Magazine yet, then I'm going to need to see you professionally because you must have something wrong with your brain.
Yeah, no doubt. And
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
all right. And then it's always fun to say hi to Claire. Let's have Claire tell us about her podcast for those of you who haven't got it yet, and then we'll be done. We'll let you go home.
Hey, Claire here. Guess what? Mr. Turner handed me the mic. I've now got my very own podcast, Pitt News on Air, your new weekly hit from Pitt News Magazine. Join me every Wednesday for stories, interviews, and a little behind-the-scenes scoop. We're live on Spotify, and yep, now on Apple Podcasts, too. Visit pittnews.com to follow. Come hang out with me and the gang. We're all there. Jake and Lena, of course, Lan Turner, David Duty, Dr. Scott Brown, Jordan Black, and even Aiden shows up on occasion. We're having a world of fun. Don't miss out. Pitt News on Air. Because news should never be boring. It's where your trading friends are. Follow us wherever you get your podcasts.
All right, there you go, guys. If you have any questions, please let me know, and we'll see you tomorrow afternoon for Power Hour. All right, we'll do a little day trading and have a little fun with the software and see if we can't learn something new and make a little bit of money. And have fun tomorrow afternoon, Power Hour, 1 o'clock Mountain Standard Time. See you then. Take care.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.